What does the Queen of Ambitious Financial Forecast have to say about asset bubbles and how they will affect millions of investors in the coming months? Are we anticipating a win-win situation, or will there be an increase in the number of people who lose their investments? Let us listen to Cathie Wood's message to the financial market. We will definitely benefit from her expertise and aspire to achieve the same level of success as investment titans. Before continuing with the video, subscribe to Dinero Association, your new go-to source for the latest business and financial ideas and advice. We'll keep growing together by monitoring industry trends and watching how corporate behemoths plot their next move. Cathie Wood warns massive assets bubble collapse. A turnaround has occurred within the economy, prompting stock market participants to raise stock prices above their actual value. This enhanced the pandemic's impact on consumer spending. Almost all businesses are closed due to health regulations, forcing traders to sell online. The need for electronic devices and technology grew dramatically to keep people engaged at home. While goods spending increased, service purchases plummeted due to different factors, such as travel restrictions. Now that most people have been vaccinated, things are returning to normal. Many are keen to enjoy services they were unable to try during the lockdown. Product consumption dropped as service consumption increased. The pricing of products also grew as a result of growing consumer demand. This led to material overstocking, which increased raw material prices. The price of lumber, for example, quadrupled. Firms scrambling to keep up with the strong demand for their products are starting to see a decrease in consumer demand. In our current condition, too many materials have been purchased by corporations that sell items. And as a result, the businesses that sell items will have to cancel a significant part of their orders on the materials required for their supply chains. This is because consumers have already stockpiled goods instead of spending on services. These cancellations will cause a drop in commodity prices, affecting other asset sectors including equities and real estate. Recent consumer spending figures don't only support Cathie Wood's prediction. The price of commodities has fallen as a result of this whole mess. Businesses ordering huge supply volumes drove the commodity boom, and now the prices are projected to collapse. Cathie Wood has built a large fan following among investors as one of the most successful asset managers over the previous decade. Her flagship fund, the ARK ETF, increased by more than 150% during one of the most turbulent years on Wall Street. The fund's value has increased from $15 million in 2017 to more than $2.4 billion by 2021. Many investors have expressed alarm about her recent remarks about asset prices. In a recent interview, Wood discussed asset price volatility and how a combination of factors will collapse the entire asset bubble. She stated that watching private entities enjoy the private equity distribution is problematic. Their high cash flow margins will disappear over time. Cathie Wood compares this to the cartoon character Wile E. Coyote jumping down a cliff. Now that commodity prices are expected to drop, equities and real estate might be affected. To begin, if commodity prices fall, this acts as a deflationary effect as the cost of things will also decline. As a result, inflation will be lower than expected. Cathie sees investors expecting this now as bond yields fall, indicating the investors are not as afraid of inflation as they think. Cathie makes a compelling argument that we are not yet trapped in a bubble as many believe. Analysts throughout the 1990s incrementally increased their estimation in price targets. We do not have it at the moment since numerous initial public offerings come and go. By the way, what is an asset bubble? An asset bubble takes place when the price of an asset, such as properties, stocks, or gold, increases substantially over a short period without being justified by the product's intrinsic value. Improperly priced assets, such as real estate, cause irrational exuberance or unreasonable optimism. Market players continue to bid up the price of an item beyond its actual sustainable value during a bubble. The bubble bursts as prices fall and demand falls, resulting in reduced business and consumer spending and a possible economic slowdown. Understanding asset bubbles' origins and historical trends may help you avoid contributing to or becoming a victim of one in the future. Keep an eye out for additional content from us in the future. If you've gained anything from this video, let us know what you think of Cathie's forecast and what you intend to do about it.